Hello everyone. This session aims to provoke practical insight into how climate risks are transforming insurance in India, highlighting real market examples, emerging products, and future opportunities for professionals and organizations. Let's dive deep into this. So India is the most common among the climate vulnerable countries due to its geography, population density, and dependence on climate sensitive sectors like agriculture and MSMEs. Events such as floods, cyclones, heat waves, and droughts are increasing both in frequency and severity. For insurers, these events translate into higher claims, business interruption, losses, asset damage, and long term portfolio stress. Hence, climate change is no longer a future concern. So, it is already impacting underwriting, pricing, and risk selection. This session introduces how green risks are reshaping insurance thinking in India. So, for example, repeated floods in cities like Chennai, Bengaluru, and Mumbai have turned once in a century events into regular losses. Let's look into some of the key areas where green risk exposures in India. India faces multiple climate exposures simultaneously: flood prone river basins, cyclone exposed coastlines, rising heat wave zones, and drought prone interiors. These risks affect different customer segments differently. So, for example, farmers face crop and income losses, MSMEs face property and business interruption losses, urban households face flooding and infrastructure breakdown. So, understanding these exposure help insurers design location specific and risk based products rather than one size fits all covers. Example: the same rainfall event impacts a farmer, a shop owner, and a warehouse differently. Let's look at some of the protection gaps here. Although disasters cause large economic losses, only a small portion is insured. Most losses are borne by individuals, businesses, or governments. This gap puts pressure on public finances and delays recovery. For insurers, this gap represents a significant growth opportunity, but only if products are affordable, simple, and quick to settle, right? So, closing the protection gap is one of the biggest goals of climate insurance globally. If we take an example, after floods, many shop owners, the small shop owners, receive government reliefs but have no insurance cover for stock or income loss. So, how are these green risks changing in insurance? Let's look at some of the points here. Traditional indemnity insurance depends on physical loss assessment, which takes time, especially after widespread disasters. Climate events even demand faster relief. This has led to the rise of parametric insurance, where claims are triggered automatically based on predefined parameters such as rainfall level, temperature, or wind speed. This removes disputes and significantly reduces settlement time. Example: if rainfall crosses a certain level in a district, payout happens automatically, no survey required. So let's look at some of the green insurance products in India. So India has already begun implementing green insurance solutions such as weather-based insurance for rainfall and temperature, crop and allied covers beyond traditional yield insurance, flood and catastrophe add-ons for property policies, ESG-linked incentives encouraging sustainable behavior. So the focus is slowly shifting from post-loss compensation to risk prevention and resilience. If we take an example, some of the insurers offer premium discounts for eco-friendly vehicles or sustainable buildings. Some of the Indian market examples are, several pilot projects in India demonstrate how climate insurance works practically. Heat wave insurance for women workers, daily wage earners, and urban laborers provides short-term income support during extreme heat. So, weather index insurance is also expanding beyond agriculture to construction, logistics, and small businesses. Parametric triggers have reduced claim settlement timelines from months to a few days. For example, a heat index crossing a threshold of automatically triggers payout to registered workers. So, how do insurers driving the change? Indian insurers and reinsurers are actively experimenting with climate-linked products. Reinsurance play a very key role, they play a key role in supporting these risks due to their large scale nature. Insurtechs add value to, by providing satellite data, weather modeling, and analytics, helping insurers price and design parametric products more very accurately. So let's take an example of a satellite rainfall data is now used instead of physical loss inspections. What are the roles of government and regulators? Let's dive deep into it. IRDAI is encouraging innovation through product flexibility and pilot based approaches. So, the government is also exploring national climate insurance frameworks to reduce fiscal stress after disasters. Public to private partnerships are essential because climate risks are systematic and cannot be managed by insurers alone. For example, crop insurance schemes and disaster pools work on shared risk models between insurers and government. Let's look at some of the critical gaps and challenges that remain here. Despite progress, challenges remain and awareness is still low, especially among rural and informal workers. Climate data integration is limited and affordability remains a concern. Distribution also remains difficult in remote areas. So the future lies in simple, transparent products that customers can easily understand and trust. Let's take an example. If a customer cannot understand the trigger, they may not trust parametric insurance, right? So what is the way forward for this? Green risk will define the next decade of insurance in India. The future will be driven by data-driven underwriting, parametric and hybrid products, ESG-aligned risk solution, and strong partnerships across insurers, governments, and technology players. Insurance will gradually move from only risk transfer to supporting long-term climate resilience. Hope you all enjoyed this webinar. See you next time. Thank you.